Hey guys, welcome back to the channel, best place for long-term stock investors. Today, we are going to share with you how inflation totally broke our financial plans. Just kidding. What we're going to talk about is really three things, right? One, IPOs of a lot of EMS companies in the tech sector, so-called tech sector, right? Some REITs, right? A lot of you have been asking us about REITs, so we're going to share our thoughts on one of them. And the last bit would be inflation and how what's happening, and of course how you can prepare to withstand it. Disclaimer, we do not own any of the shares mentioned in this video.
If you're interested in building a 6 to 7 figure stock portfolio, look no further. You can check out our free training, link in the description and comments.
Okay, Jonathan, welcome back to the table. We are going to be talking about EMS. For those of you all who don't know, it's the Electronic Manufacturing Services.
Yeah.
Okay, so it is the one part of the semiconductor value chain. If you want to know more about the value chain, how it works, where are some of the exciting opportunities, you can check it out in one of our
Archives.
Archives,
Believe it
yes.
is a semiconductor
correct.
overview.
We will put it in the cards and of course in the comments and description as well. So yeah, it's known to be a part of the semiconductor value chain that is a bit unloved. Like
Yes.
there's a lot of companies in that space, predominantly because the barriers to entry from a technical viewpoint is actually quite low.
Yep.
It's not like those fancy testing equipments that you see like a Vitrox would, manufacture.
Yeah, it is a very labor intensive.
Very
industry.
labor,
Yeah.
exactly. And so that comes with other types of risks such as ESG, which we'll talk a little bit about later on. But to my knowledge, there's really only one company that has done EMS really well, which is SKP Resources. They've been one of actually Malaysia's greatest success stories, even if you include the crashes of recent times. Now, one thing we want to bring up today is that there's actually going to be a lot of new listings. Recently, Bursa revamped their website, right? So now people can see the upcoming IPOs in a much better format.
Yes.
And I'm just curious, can they Control F? Can we Control F the PDF?
Yeah, at the moment, yes, we can.
Nice.
We still can. Yeah.
Making
but
progress.
After the IPO, right?
Right.
Maybe they will like put a scan copy of it. I'm not sure. I'm not sure. Maybe.
Hey, you know what? Progress is progress, right? So anyway, coming back, the key thing here is that there's going to be a lot of not just new listings, but new EMS listings.
Yes.
Right. So on your screen here, you have ATAC, Betamac, and Synergens.
Yes.
Right?
So ATAC is actually one of the company that is listed, I think was 2 months ago or 1 month ago. I cannot remember. Yeah. But it is one of the EMS company that actually got listed in Bursa. And if you notice the prospectus exposure that is announced by Bursa or even Securities Commission, you notice that there's a few more companies that are actually going into listing. Betamac and Synergens. These two are also another potential EMS related firms. There's actually another ATE firm. I've forgotten what's the name, but they are also planning to go to IPO. I believe it's something like genetic.
Okay.
Their business model is somewhat similar to
like
genetic.
automation systems and things like that.
But the funny thing is that even though these companies are going through IPO, right, they also kind of know the risk of entering into this industry because of this ESG, Andy Hall, all.
For those who don't know, I think you can check some of our older videos on Andy Hall and ESG stuff, like ATA IMS, right?
Yeah.
So I think the key thing about the key thing I want to add, and then I'll let you finish, is that these are some of the riskiest parts of the industry.
Yes.
Right. They're pretty low margin. Essentially, the reputation that they get is that all these multinationals that employ their services see them as like a sweatshop. Right. It's no different from like I don't know, with all due respect, maybe a shirt manufacturing place in Bangladesh, or let's say. Right. So of course, they're not doing shirts, so they're definitely more higher value in that sense. But in the industry, they are the guys that suffer a lot. And so, sorry, you want to continue?
Oh, no, I think you just pointed it out really perfectly what I was about to say. Basically, I'm just trying to touch upon that knowing that there is a risk,
Yep.
but they are still entering into this industry. I think one of the reason that they are actually going to this IPO is because I think there's just too much demand at the
That's
moment.
true. That's true.
All those front end kind of semiconductor, those that in the upper chain, value chain, semiconductor suppliers. Do you call it suppliers or do you call it designers?
Yeah.
Yeah, there's designers, right? So they actually need more this type of EMS services, which is why you're seeing a lot of companies are actually going to this industry just to satisfy the demand.
That, or maybe they want to de-risk later Andy Hall come after them again, so they can cash out a little bit. Anyway, that's just speculation. So moving on some of the charts here.
So actually this is something I want to show you guys, that some of the existing EMS's share price movement or share price performance so far. So you've noticed, right, the safer ones are SKP Resources and also PIE. Far, the reason why they are actually going down like 20% to 25% is because of the market condition. There's like a tech correction at the moment. But if you look at those companies that actually got face the issue of Andy Hall, right, basically the ESG concern, you notice that most of their share price are actually down like 40 to 85%.
I thought MS1 makes it look like it's a bonus issue, right?
Yeah,
but that's how crazy it is, right?
Yeah, so there's actually such risk if you are looking to invest in these kind of companies. You will never know whether Andy Hall will come and catch out these new companies. It potentially may be, but assuming that they can handle the ESG part well, then I believe that those companies are actually worth looking to. Looking to.
I think what you want, if you're planning to invest in the EMS sector, is you want to look for companies that have strong relationships with MNCs. Where by virtue of that relationship, they are able to bypass some of these ESG concerns, because then the MNCs will be there to help them also try and alleviate some of these issues. Because if the relationship between the EMS and the MNCs are strong, then they're sticky. And so not only is the company interested in retaining their, I guess, ESG status, but also the MNCs will be concerned, and so you've got more resources put into handling these sort of problems. And of course, SKP is the best at this. So
at the moment,
right? So of course, other considerations you have to put in, like for example, what are the kind of products that these EMS develop for, or manufacture for. Some of them will be higher value, some of them lower value. Of course, you want to go for those higher value ones. But we shall move on to REITs. All right, guys, if you've been watching our videos, you know that data is really important to us, right? So we're always on the lookout for what we call good data aggregators. And so far in the market right now, for its price, the best we have to say is Ticker, right? Ticker allows you to manipulate your data, organize it in a way that's very intuitive, and it has local and global data, and they even compare financials for you. I really struggle to find other data aggregators out there that produce this sort of services. So if you're interested in this software, just check out the link in our description or comments. All right, guys. So this is a first time, right? I think it's somewhat of a first time for us with REITs, right? If you've been following us, you will know we don't talk about REITs a lot. A lot of the reasons are, in our opinion, legitimate why we don't talk about REITs. But certainly they have been pummeled down, right? Thanks to COVID. So things start to look a little bit more interesting nowadays. So for the very first time, I know a lot of you guys asked in the comments, not just like recently, but like since the beginning, what do you think of REIT X and Y? What do you think of the REIT market? Should we invest in REIT? So finally, we're going to give our thoughts on REITs, but we're going to talk about a specific REIT this time because their quarterlies just came out, which is SunReit or Sunway REIT, right? So you can see here, analysts is revising up Sunway REIT's earnings forecast, target prices on improved income outlook. Now, that's all fancy words, right? Really, what if you're in the Klang Valley region, The reason is very simple. Things are getting really bad when it comes to the jam.
Yeah.
If you go to not just SunReit, other big malls especially, it's getting packed, especially on the weekend and things like that. So, you don't need to look at the numbers to know that they are going to increase. But yes, the quarterlies just came out. So guide us through, Jonathan.
Yeah, so I just got it from their financial highlights in their quarter results. So if you notice, right, there's like 4 different types of years. So there's 2019 all the way to 2022.
From the right to the left.
Yeah, from the right to the left. And then this is only for the first quarter only, quarter 1 results. So you notice, right, in quarter 1 for 2019, their revenue, it's around like 150 million. And then, of course, it dropped a little bit when it comes to 2020 because of COVID. There's a lot of things that got put on hold. And then, if you notice, in 2022, their revenues are starting to bump back up to pre-COVID levels.
Yeah.
And not only that, their earnings are actually generating even higher than what it was in 2019. So if you notice, the profit for the period in 2019 was around 68.9.
Correct.
Now it's about 106.
Right.
So that's about like I believe 50% increase.
Yes. Now it's worth noting. I just looked through the numbers yesterday as well. That the 2 big factors that caused it to be like that when you compare 2019 and 2022, the first one would be that actually there's a property revaluation. Right?
Oh,
so
yes.
you can imagine during COVID, a lot of these property values got hit down.
Yeah.
So now they revalued it. So that constitutes roughly half of the increase of the profits. Then the second one would probably be the finance costs. So perhaps they've done some very good refinancing on their properties. So that's roughly about, you can say, nearly 30 million of profits accounted for. So it's not purely because of the recovery. But yes, if you break it down, the recovery did play a role, but it's not the biggest role.
Right.
Yes. Yeah, but nevertheless, right? Yeah. So as I was mentioning, this is exactly what it looks like. Is this Paradigm Mall?
Yes, that was the
Right, that's Paradigm
That was
Mall,
during the cosplay event.
Yeah. Recently there was a cosplay event on Paradigm Mall. A lot of things happened actually. There was some issues as well. But yeah, you can see it's getting pain, right?
Yeah.
As well.
And I believe that it's not going to be happening in Paradigm Mall. I believe that even Pavilion or even Sunway Pyramid, Wanutama, all these areas going to be mad packed. And even the roads like just now you mentioned, right? Yeah, just now when I was on the way to LHDN, when I was going back from Shah Alam, it was also still jam. It was quite jam actually. I think there was like a 8 to 10 minutes jam in one particular highway.
Yeah. So I mean, as an investment, right? Here are some things to consider. Yes, it's true there's a recovery. I'm not sure about the share price for.
Yeah. So if you look at
it, there you go.
Yep. If you look at the share price, it actually has been down about 20.9%. If you compare to 2019's level, but the reason why I want to point this out is because right now we are going back to their pre-COVID-19's earnings.
Yep.
Yeah. So there may be I would say that.
I would say it is a 40% upside.
Yes. Roughly about 24. Yeah, correct.
It's about 42% upside from if it returns back, which is pretty decent for a REIT. Don't forget they do give juicy dividends.
Yes,
so
correct.
Even if it returns, if it grows 40% in 2 years, it's still quite attractive.
But there's a risk though. Another risk is the I believe it was the finance cost part.
So we will come back.
Yeah, we will never know whether the
interest
rate, the rise in interest rate will actually make them to have like incur more costs for their financing. So that's another risk that you may want to consider.
Right.
But overall, I think it is still there's still a positive catalyst around REITs at the moment because of inflation and everything that is happening right now.
Because they can start increasing rent and all that.
Yes,
right?
and also because we're going back to recovery state. So yeah, there's two side of the coin. Whether do you believe that there's more positive outcome for REITs or negative? Generally, what do you think?
I'm generally positive. It's just that if I were to go into this, I have to recognize that it's not going to be a long-term play.
Yeah.
Because you get the rebound and that's it, right? So,
Yes.
but that doesn't mean that REITs are bad in general, because we have to remember SunReit is a commercial REIT, right? It's considered a commercial REIT, exactly. So usually there's a limitation if you think about it, right? Let's say Sunway Pyramid, for example, does not increase its size. The lion does not get bigger every year, right? But you could foresee something like e-commerce related, a warehousing, industrial related kind of REIT actually growing, quite exponentially, right? Because not only can they build new factories, then they can build new floors on their existing factories for storage, warehousing, things like that. So if I were to go into REITs, I would be looking for all those kind of industries where they are very much linked to an industry that's growing. Yeah. So if you look at SunReit, right, specifically for Pyramid, right, they have other stuff as well, of course. But specifically for like Pyramid, they're getting their source of money from retail. And, the Malaysian retail, I don't think it's as bad as people think, right? We'll talk about inflation later on. I don't think it's as bad as people think where, Malaysians no money. Yeah, but, iPhone 12, iPhone 13, there's always someone lining up. Yeah. But when people are... The way to think about Sunway Pyramid is that it's linked to the Malaysian retail, more specifically maybe the Klang Valley retail. So yes, it's relative to the whole country, quite a high the spend per person is high, but it's not going to grow, right? Because people in the Klang Valley, roughly, I think was 8 million. Correct me if in the comment section, how many people in the Klang Valley. There's a certain limitation, right? Incomes, it's not like incomes are rising like max, and there's an influx of people coming into Klang Valley, and so there's always going to be that limitation, a cap on where they can grow. So that's why this is just recovery to before COVID. Beyond that, we'll probably have to dig a little bit deeper.
Now I'm just hoping that there's like data centers REITs in Malaysia.
Yeah,
we have it in Singapore, but not yet in Malaysia.
Exactly, data center REITs, things like that. Yeah. So looking forward to those rather than maybe not, less so for retail stuff.
If you're liking what you see, make sure you smash the like and subscribe button. Also, don't forget to tap on that notification bell so that you get notified when new videos are out for you.
Okay, the topic on many people's minds right now, the only thing that is probably more relevant is the ringgit dropping, but inflation. So, there's going to be 50 to 60% price hike in June, according to the Malaysian Reserve for, food. I assume it's food stuff, right? That's kind of true, really, because my, the place nearby where I stay, the chicken rice, chicken and like char siu and all that used to be like some 58 ringgit. Yes, it was 10 already.
Oh,
that's quite crazy. So it's not 50-60% hike, because we have to remember, just like, it's not like, okay, if 50-60% hike for like food stuff means that you go to your hawker store or wherever, it's going to be 50-60%, right? Because the cost for food the cost to produce the food is maybe half, 60% of the actual revenue that they make, right? Yeah. So, but it makes sense, right? Because if you're going to grow 50%, the chicken rice store near my place grew by 25% 20-25% in terms of sales, in terms of pricing. So it makes sense, right?
Yeah, and it depends on the cost also that they are bearing.
The
chicken that they are buying, the rice that they are having. Yeah. So actually, I think I did something that the reason for the price hike in 50 to 60%, right? So this is some of the reason that is given by Malaysian Reserve. So they mentioned that one of the reasons is because our minimum wage is increasing from, I believe it was 1,200 before they updated. Yeah, so now it's about 1,500 minimum wage. Another 300 bump. And another reason is because of supply shortages. Due to one, I think there is still a little bit of supply chain disruption, but it's easing already a lot. And also not only that, it's because of Russia and Ukraine conflict. Because both of these countries, some of them do supply chicken, if I'm not mistaken, today.
Yeah, I'm not too sure about that, but we can check later.
Yeah, some of them even supply like, I believe it's is it wheat?
Yes, wheat. Yes, correct.
Yeah, Ukraine. Wheat also. Yeah, from Ukraine. So all these, I wouldn't say unforeseen, but all these conflict actually resulted why there's a price hike in all our basic items. because there's so little supply and there's so much demand for that basic item. So it's an unfortunate event that we have to go through eventually. Yeah. So if you're noticing that 50 to 60% hike in prices, I mean, this is also one of the how would I say it, news or something, or lesson to like tell us that we should be aware of how we are going to spend our money.
Yep.
Yeah, we shouldn't be spending too much on luxury goods. I think they also mentioned that the Malaysian Reserve, I think one of the analysts says that please don't refrain from spending too much on unnecessary expenses and whatnot. Yeah, and maybe even invest. And another interesting news we have here by Focus Malaysia is that netizens are actually boycotting chickens because there is an expose of cartel attempting to cut supply. So this is another interesting statement, because I think the reason is because the wholesalers are unable to make any. I think they are making a loss,
right,
if they ever sell the chicken. So they're planning to, like, you know what, I'm not gonna sell. I'm not gonna take any stock anymore from you. So this is another reason we'll be seeing another supply interruption, which will cause even a price hike for basic items.
Yeah, so, and even the government is delaying, right, providing subsidies for chicken.
Yeah, exactly. Yeah, actually, the government supposed to like address this issue ASAP one, because this is a very important. It's like, imagine you suddenly nobody's buying chicken anymore, and then because of this, right? Definitely it will cause a lot of problems in Malaysia.
Man, chicken is so important, man.
Yeah,
I mean.
Yeah, and if you look at the Malaysian food inflation index, right? So you notice that we are actually going back to where 2018 or even 2014's level, which is around 4%. Do you think? I think this level is pretty normal, right? I would say.
I think I could be wrong because I'm not an inflation expert. However, I believe a big chunk of that will probably be because of GST as well.
Oh.
It adds to this, right? Because you spend more, right?
Right.
I'm not 100% sure, but it could be the case. So, in fact, if I'm right, the current hike is like the real economy inflation, rather than an artificial one like GST. Could be the case. Cannot confirm. Because you see, the immediate drop in inflation happened in 2018.
Yeah, correct. That's the one that we got SST, right? Yeah, the change.
There was a bit of a change and all that. So
yeah, actually, you made a fair point.
It could be wrong. I could be wrong, but I'm not so sure. So,
but if it's not, do correct us in the comments.
So, I think So you got one more thing to add here, right?
Oh, this is basically a comparison between the basic food items versus the minimum wage that you are living off. So right now, actually, our minimum wage is actually around like 1,500. I think this data was about 1,200 per month. So all in all, if you add together, right, the 2022's food costs will roughly give you around 371 or 372 ringgit for all the chicken, bread, milk, and whatnot. So if you, how much does it actually contributes in your, how much you need to fork out if you, let's say, earning at a minimum wage? It is roughly, I think, around, let me do a quick math. I think it's around 20%, 20 to 30%.
Okay.
Yeah. Which is quite, actually, it is pretty true because I also calculate my family's monthly expenses. So I think about 30% of it actually goes to food.
For myself personally, I would say it's probably around there also. But to be fair, also a lot of it's discretionary. So, i.e., I don't have to spend that much, but I'm still spending. Right? So
yeah, but it's interesting data to look at. Unfortunately, I didn't manage to get any data which is on the 2018 because I wanted to like do a comparison to see whether, but definitely there's a price hike already.
100%. So I want to go back here, and I think there are some things that I would try and address, and also we should end by explaining what to do essentially, right? And later we have a Q&A which is somewhat related to inflation as well. So we have the minimum wage. This is literally proof, right, that increasing minimum wage does not actually improve the lives of the lowest in terms of the socioeconomic status for people, right? Because you increase the wages, then it gives business people all the excuse in the world to increase their prices, right? And then when customers come in and complain why your prices have gone up, because minimum wage has gone up, right? So they're essentially blaming the government. So this is a lesson, I think, for all of us who thought that increasing the minimum wage would actually solve a lot of problems. Now, the second one about supply shortage, unfortunately, thanks to COVID, people are so worried about whether they can actually ship their goods and things like that. So a lot of things are actually stored in warehouses at different ports and whatnot, and so things are not, going out, right? We are entering a period of, I think people are still feeling uncertain about things. Of course, I think slightly better now, but people are still feeling uncertain about things, and as a result, the outlook, right, will be a lot lower.
And actually recently there's like this new disease, the monkeypox, right?
Yeah, monkeypox. Yeah.
So
correct.
that we still don't know whether it needs more, like we need to sanitize or not before even shipping back to our country.
Exactly. So, but for the Russian-Ukraine conflict, it's not something we can really solve.
Yeah, we cannot control. So.
In fact, I would add, in terms of supply shortages, one thing that is causing this problem is also ESG, right?
Okay.
Because if you think about it, thanks to ESG, like capex for oil and gas is like an all-time low last year, right? So guess what? Like, imagine so many things require the usage of oil, so then inflation is but exactly for food, it's hard to calculate, but we know it's going to be affected. And maybe more specifically for food, especially those food that are end product food, not raw materials, would be palm oil, right?
Yeah.
Palm oil, thanks to ESG, they can't burn any more lands. You realize in the past couple of years, Malaysians have not been receiving the haze.
Oh, yeah.
Right? Yeah, so why? So guess what? Look, if there's less palm oil producers out there competing, prices will shoot up. Has shot up already. Yes, if you're owning palm oil companies, you're not complaining.
Yeah.
But as you know, a lot of the oil that we use for cooking and all that actually, uses palm oil. So all this will eat into the cost, right? So how are you, handling inflation?
How am I handling?
Yeah.
I mean, I'm just living what I'm just living within my means. And I've always been doing that ever since when I was in university. So it doesn't really affect me that much.
Right.
Yeah.
I mean, it does affect you, but not it's not gonna make you like go borrow money and
exactly.
Like that.
Yep.
But in terms of investing, like how would you position your portfolio?
In terms of investing, I'm actually still investing like how I usually invest.
Right. And
like
why
50%.
don't you change?
Because like I mentioned,
Right.
To me it doesn't really like affect me that much also.
Oh no, sorry. Maybe in terms of your portfolio, because
like what
some people
industry?
will say, okay, inflation is happening, so we should have more commodities.
Okay, yeah,
Right?
I got it.
So for yourself,
So for me, I am more of like a proxy commodity kind of like position right now.
Right.
Yeah,
right. Okay.
I'm actually investing in somewhat which is related to the palm oil industry, but it's like how to say? I'll just say it's just to give a hint, not financial advice, but it's basically like it's a company that does active ingredients. Which is basically your pesticides, your insecticides, your fungicides, and whatnot.
Yeah.
And it's also basically it's riding on the growth for palm oil in a way.
Because if you're saying if more people like plant palm oil, then they'll use more pesticides, something like that, is it?
No, because the palm oil land, the land in the arable land for palm oil is actually getting very limited.
Yep.
Yeah. Think it is very evident in Malaysia. I think we have like a good friend of us that told us that Malaysia has actually stopped giving out license to people to plant or to do like a palm oil business.
Yep.
Yeah, so it's already capped already in Malaysia, but maybe in other countries there's still land, but it's getting very limited. And not only that, populations are actually still growing a lot. And with population growing and with the land getting more and more limited, definitely the food that you're going to grow is also going to be very limited because it's kept within that land.
So prices will increase. Huh?
And also there's actually a study that shows that I think it's about 40 to 50% of food are actually lost because of these pests.
Ooh.
Yeah, so that's why pesticide is actually, you cannot run away from it.
Right.
It needs to be there. Yeah,
Nice,
so
nice.
I'm actually riding on that wave,
Makes
but
sense.
not financial
Yes,
advice.
yes.
Yeah.
I think if you're going to, I think the best way to combat inflation is two things. One is, of course, all this commodity stuff because they ride on it.
Yeah.
But good companies can raise prices regardless,
Yep.
right? And some companies just increase their prices 10, 15% every year. So it doesn't really matter. You want to find companies with pricing power, is my point.
Yeah, and also they are not afraid to spend on capex to continue growing their business.
Yeah, but
What's
however, you also need to make sure that if they spend on capex, that the inflation for their capex does not become faster
Yeah.
than them raising prices.
Yes.
So that's what you have to take note of.
Yeah.
So yeah, we'll move on to the Q&A. Okay, question of the week. This is from Friends Waimina. He or she actually asked us this question, I believe,
This
in
was
our Ringgit video.
Yes, correct.
So this was maybe 2 to 3 weeks ago. How about using precious metals to mitigate this? Now, for those of you who didn't watch the video, this means the ringgit dropping in value relative to the US dollar. But I think it's also relevant to our discussion on inflation. I think a lot of people want to know, what do we think about precious metals to mitigate inflation and, of course, ringgit dropping. Now, precious metals can mean many things, but usually they mean two: gold and silver, right? I think someone was saying that they're saying palladium. That's another option for investing as well. Regardless, yeah, do you own any gold?
No. I mean, okay, I'm not going to say that.
No, but why not? Why not? But why not?
Why not? I mean, I think I'm not really like someone who likes to hold physical items that is prone to be like, you can get stolen.
I see.
If let's say, yeah, I'm more towards like holding something that is hard to get stolen, which is one thing is stock, as long as you're investing in the right company. Then another one is maybe I'll invest if I am forced to put my money into another asset class, which is property.
I think that's better, slightly better.
Yeah, these two. Gold, I don't know, maybe it's just not my forte. It's just not something I would really own.
Yeah.
But watches, yes, maybe. Watches, I'll maybe start to.
Watches made of gold, right?
Watches made of gold, yeah,
Right.
exactly.
Yeah. Look, I think we won't go too long. If you watch like some of our older videos, you know what we think of gold. But the reason I don't invest in gold, disclaimer, I do have like a small gold bar at home, like a small one. Probably bought it when gold was about 1,001. Now gold is 1,009, 1,008, something like that. So it's anyway a small one, like a few ounces only. The thing about gold is that it doesn't value add. And so I don't think it's going to go away, right? It's not wrong to buy gold.
I think one way to also maybe describe about the nature of gold is that it's just not a productive asset.
Yeah, exactly. So there's no value add beyond just that shiny rock, right?
Yeah, it's like P of what?
Yeah, so exactly. Where's the earnings? How do you actually make money from that gold? You just have to hope someone else will buy it, more for you lah. Yeah. But to be fair, there is it is inflation. It is quite inflation resistant. It's just that there are better options, right? Over the long term, and this will trigger a lot of people, but go back, sorry. But over the long term, stocks actually are better hedges against inflation, right? Over and this is not like the last 10 years, right? This is like over the past 100 years.
Yeah.
It has grown, 6% after inflation, something like that. Whereas gold has actually, after inflation, maybe at 0 to 1% only.
Yeah.
Meaning you are preserving your wealth, but you're not growing it per se. So yeah, that's all we have for today. Not much to talk about gold and silver, but definitely a lot to talk about inflation and the rest. Hope you find this video very useful. If you do, remember to share it with some of your friends. Come check us out on our Telegram announcement chat, as well as our Instagram and Facebook page. We'll see you in the next video next week.